Thanks Anish for this, I think pretty nice introduction done. Guys, this is interesting and we have, two very influential voices of Indian real estate who are going to take the stage today to cover this topic. One making a debut here at Images, one, as Amitabh told me, a very old friend who's now probably coming back to the stage. So guys, just please put your hands together. I'm going to introduce Siddharth Nawal, who's making his debut at Images today. Siddharth's the principal at Blackstone India. One of the key architects of building India's largest retail real estate platform. Siddharth's been instrumental since day one in putting together the Nexus Select Trust growth story, which he's going to talk about today from its inception. Another man who needs no introduction is Arjun Sharma. Arjun is the chairman of Select Group and the vice chairman of the Nexus Select Trust. True pioneer, built Select City Walk. I think everyone in this room should know what that asset did for India and built scale all along the way. So thank you very much, gentlemen, for being here. So that since Arjun has been here before and it's your debut, I'll probably throw the first one at you. Sorry? The tougher one. He's been here before. I've known him a little longer. He kind of said that, listen, throw the tough ones at Siddharth. let him feel the heat for the first time. So, Siddharth, let's just go a little bit back in time. You guys, in the start thought of putting these bunch of malls together. Build a retail platform that could change the game of India. And just talk us through how that vision's kind of really played out.
Thanks, Anuj. First of all, thanks for having me here. Really happy to have Arjun, our partner in Nexus as well here. On vision, I think if you look at the way we thought about the whole retail piece, obviously when Blackstone started in India, we did a lot of office deals in the beginning. Obviously IT corridors, some Bombay, Pune. But then we realized there was a large untapped space, which is retail, which was growing. Thesis was pretty simple, right? The thesis was that the middle class consumption was picking up.
You're making it sound simple. It's not as simple as that.
No, I think the people in the room probably understand better than me. But I'll just try to summarize the thesis we thought about retail, right? That urbanization was picking up. Middle class was growing and continues to grow really fast. Income levels are rising. India now has crossed $2,000 income levels. So that makes it a pretty compelling place if you look at globally to invest into retail, right? Obviously, on the way, there are a bunch of headwinds which come as in any story, right? COVID being one of them. E-commerce came on the way. People thought, now Amazon will take over everything. We don't need malls anymore, etc. But having said that, today when 2025 we are sitting here, I think feels pretty good place to be in, and large part of the strategy seems to have played out pretty well.
But 19 assets today in the portfolio, and hopefully counting more soon. But Arjun, let me come to you quickly. You built India's probably, we could say one of the most, I'll probably say the most iconic asset, which is called Select City Walk. And it wouldn't have been an easy decision to take. What really made you take this decision of actually joining with Nexus?
Thank you, Anuj. And I'm glad to be back at Images. You're right, I'm coming after 10 years. And it's good to meet old friends. Of course, I bump into a lot of people in the corridors of Select. And of course, a lot of them also meet me up in our offices. And we chat and we ideate. So thank you very much, Images, for getting me here. What made us take that decision? Not an easy one, but when you have a partner like Blackstone, when you have people like Siddharth to work with Toheen to work with, it makes life very easy. We were being courted by a lot of people, and we were never keen to kind of exit the business. What we were keen was the opportunity that Nexus presented of being a part of a bigger growth story. A growth story that is driven by so much passion, with so much perseverance by not just the leadership, but just across the whole system. So whether it's at our mall level, whether it's our head office, honestly, it is one of the greatest joys to see people, cut across functions and present a brilliant face of retail India. And as Siddharth said, the opportunity of growth multiplies when you have a partner like Blackstone and a platform like Nexus to build. We are 19 malls. We have recently acquired one shopping center outside the mall, which is South City. We have our colleague Amit sitting here. Amit, just to tell you, yeah, he's sitting right there. There was a reason that we couldn't acquire it directly in the REIT because it came bundled with an asset in Sri Lanka, and the REIT laws don't allow an international asset to be brought in. So at some stage, once that exits, then we will look at what the next options around that, whether we do it ourselves, whether we offer it to the REIT at an arm's length basis. So really, it's a growth story. It's playing the India consumption story, which is multiplying. I can only tell you, sitting on the ground, our leasing team is kind of sitting at about 97-98% occupancy across 11 million square feet, no mean achievement, and demand is still very strong. So when you look at all these big picture, macro picture, micro picture stories, it all adds up to a great platform and a continued story. And incidentally, we bought more shares in it post the listing. So forget about selling. I am extremely bullish about the business based on the fabulous teams that we run and the opportunity that India offers.
No, but what I hear from Siddharth's answer and yours as well, I think a lot of your partnership came together because you all both believed in the India story together, and then of course great set of people on both sides. Siddharth, I'll come back to you and let's talk a little bit about growth. The REITs really thrive on smart acquisitions. What do you see? What are you seeing the market opportunity today for you to continue to have that growth?
That's a great question, I think, and we discuss internally a lot about this question. So in India, if you see, Anuj, there are, call it 110, 120 malls in total, which are grade A, which are sort of, you can acquire in a way, right? Out of those, I would say, call it half are already owned by, say, institutional players, between larger companies, etc. The remaining half are owned largely by people who are either a single mall developer or for who the mall is not number one business, right? There are large residential players, there are large commercial players, and mall is as a secondary sort of business to them, right? And that is where we see the opportunity, where we think that over period, people will realize, people will see Nexus as a natural home to those assets. And by contributing to Nexus, the best part which comes is that you don't have to cash out and don't play the future growth, right? The way Arjun contributed Select, while he's contributed, he's part of the journey, he joined us in the journey of growth on future. That can be achieved in a REIT framework, that you take the units of the REIT, which continues to grow, and you benefit from that story in a long term.
I mean, in your own right, you still remain owner.
Yeah, in your right, you are the owner, exactly. So that's, I think, the biggest differentiator with a platform like Nexus, which I don't think comes in many places, that while you contribute the asset, you become part of a larger journey, but you still play the future growth story on that. So that's the selling pitch we have.
That's great. But I mean, this is interesting, and I do want to put this. Most people are not willing to sell because they think ownership will go away. Actually, you're remaining the owner, you're just giving it to a better platform to manage on your behalf from that perspective. But Arjun, let me come back to you quickly. Sorry, you want to add something?
No. I just wanted to just say that, from a single asset owner, it just makes a lot of sense because today you need scale in every business. There are risks in owning a single asset or even 2 or 3 assets. You could have geographical concentration risks. There's so many other factors. But today we are in 15 cities across the country. It just makes for a very balanced portfolio. And it allows for great efficiencies of scale. It's just absolutely a stunning platform. And the whole concept of a REIT, I must say, compliments to our financial planners at SEBI and in the finance ministry to think this through, because this is the only way to unlock value sitting in some of these assets which have obviously got recurring income streams.
One that Arjun and I had an interview recently with another colleague from the developer fraternity. He's saying, Anuj, everyone on the other side is today having a portfolio. If we don't build for a portfolio on our side, then we don't have an equal seat on the table. So, for people who are just owning one mall, they're getting sometimes maybe pushed around a little bit from some of these large portfolio companies. He just said that we need to be having an equal seat on the table, and which is why we need to put a portfolio together. So, great. Arjun, coming to you. Nexus is now kind of gone into, tier 2 and tier 3. And I know there are a few interesting stories on that one. How has that really played out? And, are the smaller cities the next frontier?
Well, to begin with, there is obviously solid growth in our main metros. Absolutely. If you look at some of our metros, now in Bangalore, we have 4 shopping centers. Totally, there are 18 micro markets in Bangalore. So, while the growth is certainly showing in the tier 2 cities, so, when we look at Ludhiana, we look at for example, our mall in Bhubaneswar, consumption has been growing at 19%. And so we are very bullish about both the metros and the tier 2, tier 3 cities. I think our teams have currently a list of about 20 cities that they would like to see us growing into in the next 3 to 5 years, based on a lot of data that is coming out of pin codes of deliveries, Amazon, Flipkart, what is the consumption happening? And be rest assured, some of these tier 2, 3 cities are outpacing the demand growth of the tier 1 cities. But I think it's a good balance to have both in the portfolio.
Yeah, but 19% coming out of Bhubaneswar after all these years is outstanding.
We just recently acquired a mall in Ludhiana, and we're seeing some, literally month-on-month growth in numbers coming out of Ludhiana alone. Our 4th mall, the Vegav City Mall in Bangalore, I think literally from a negative growth of January last year, and when we took over, our teams took over in March, there's been a positive bounce back. And that also really comes not just from acquiring the assets, it's what we do with the assets. It's about the collective vision of, first of all, just cleaning up some of these assets, remarketing them, repositioning them. Nishank and team will do, events around making sure that we drive the correct footfalls into them. So it's really not about just acquiring the asset, it's to create the right ecosystem around the assets. That's just the Nexus, playbook.
Got it. Siddharth, I'm going to ask you to put your global hat on, and give us some idea of how India really stacks up, against global retail markets.
So globally, retail was a bad word, say, a few years back, right? And largely driven by e-commerce, where a lot of demand shifted to e-commerce, etc. And then retail sort of became a little bit bad word. But I think globally also now retail has started picking up. We've done a large sort of retail deal in US pretty recently. But how India is different, I think that is where our focus has been. And I would say 10 years back our thesis was when we started doing it, it's no different today, right? The middle class continues to rise, urbanization continues to plays out. You'll still seeing larger cities attracting more and more talent coming in, be it the IT corridors, be it the commercial cities like Mumbai. So city center land parcels wherever are available can be converted into malls. Can we do more retail there? Yes, there is demand. If you look at brand side of it, right? Last 10 years, and I don't have the count really, but last 10 years, I would not be surprised that maybe 50 brands have entered into the country. So globally, there is, even in the brand's mind, and we get a lot of calls through our global offices, etc. In the brand's mind, India plays pretty high, that they want to enter India, either are entering India or are in some phase of analyzing India. So over a period, will you keep seeing more brands entering India? Yes. And a lot of brands are in touch with our leasing team, Nirjar, Jay and Nishank. So we keep seeing globally huge momentum towards India, and I don't see this stopping pretty soon. And Select, as Arjun has been the welcomer of most amount of brands in India probably. So
Select
his
is
perspective
known for the first store in the country.
Yes, yes.
Yeah, we are very blessed with that. And I have to also thank some of my old colleagues sitting there, Yogeshwar and Gitanjali. I will never ever, forget their contribution.
Yeah, Yogeshwar, you can say hi.
Absolutely, it takes more than a village to grow a business. Anyway, coming to one point that Sid mentioned, and adhering to your point, what's the difference in India and globally? In India, we are seeing some very smart convergence of the hybrid model, where even the online companies today want to be in the right retail format. You don't see so much of that in the Western world. The demand if your economy is growing at 6.5%, 7%, and America, yes, is a bit of a black box out there. We don't know what's going to happen with the tariff wars, how it will play out. So that's a little bit. But if you look at other markets in Europe, Russia, China, they're all affected in demand. So today, these global brands, they want to come into India. Indian brands, which we really respect hugely, want to grow in India, and they're getting their own funding, they're getting the story right. The online brands want to expand in India. So really it's a convergence coming in from everywhere. You're getting demand for prime, leasing spaces. In fact, poor Nirzar and team is doing more rationing of spaces than they are doing of, actively, trying to look for brands. So it's a problem that we don't like. Because obviously we would want to welcome more and more international brands and the growth of Indian brands. I think the growth story is very intact for India, and the platform is the only way to make sure that you don't get pushed around too much. I won't adhere to that, but you can get pushed around by some brands, but it's okay. That's part of the game. If I was in their place, I'd probably push more, but it's okay.
But Arjun, I'm going to ask a question from this. If the fundamentals of India are so good, why are people not just building more malls?
Building a mall is a difficult subject. The typical real estate players have a shorter window of looking at any business. Residential, you launch something, you probably can pre-sell a lot of it. Offices, the GCC demand is strong. Shopping centers is a bit of a longer game. By the time you build, you lease, you market, you're looking at a 4 to 5 year horizon in the development of a mall. And then of course, typical of anything, you have risks around development. But I think the game really for us, if you ask me, our strategy is to acquire. We would like, given the first choice, we would like to make smart acquisitions at the correct cap rate. Fortunately, our REIT allows us the ability to have a very, very tight cap rate should we need it. Of course, it really depends on asset to asset. There's no one rule. And then I think the opportunity to work with landowners to do some joint development or development which is built to suit is certainly on the cards. Gautam and Jen and Nirzar are all looking at that. And I think you will see a lot of activity coming from us, especially in tier 2 cities, where we would like to see the growth of shopping centers, build. Because shopping centers are not just about shopping. They are really about building the community. We saw the experience in City Walk. We see it in Chandigarh. We see it in Seawoods in Mumbai. We see it everywhere across the platform. Our shopping centers today are magnets of the microcosm that the city represents. And really, if you look at it, and there's a lot of retailers out there who have also grown on the high street. But when there is a slight downturn, no one will ever leave a store in a shopping mall. They will leave the high street location first because they know that it's very difficult to go back into some of these malls. It's not to say that we don't have exits. We certainly do. Some that happen organically and some that we also want organically because we need to keep the mall active for the purpose of our customer.
So Siddharth, I'm going to take this to you next, and to some extent from what Arjun is saying. I think we built and you strategically acquired a lot of assets. From here, is it a buy or a build story?
See, for us, largely it has been a buy story so far. But are we averse to building? Answer is no. At a right place, for a right market, whether we'll build, right? But more, I think, than me, probably Arjun is the right person to answer this because he has seen both sides of building as well as buying now. So
Yeah, I think both strategies, no question.
Because then that opens up a new avenue for what the REIT is planning.
Absolutely, and I think because as Sid said in the beginning, there's only 110, 120 malls. There are some cities that just don't have, the right real estate. So we would be happy to work with landowners, land developers, whom we could trust, who can do a build to suit. So a combination of this is what you will see over the next 5-10 years in the Nexus playbook. And our CEO, Dilip, is very clear that he wants to double this portfolio in 5 years. He's made a public statement on that account, so I'm only quoting him. And we have to be very careful.
I was in that forum when he made that statement.
So when Dilip said it, then it's fine. So we want to double the portfolio. So you're looking at 20 million square feet in that zip code, hopefully plus minus some number. But that's the playbook, and that's what we want to achieve.
Wow, that's going to be some story. Siddharth, you've been part of every single REIT, practically every REIT in the country. What's next for REITs?
So, except one REIT, fortunately, we have been part of all the REITs in the country so far. If you ask me what next, in my view, I think there is a lot of it to the next. It just started, just to take sort of a step back. The REIT regulations in this country we started work with a lot of regulators, etc. in 2015, and 18 around when the regulations sort of finished, and 19 is when the first REIT was launched. So it's like pretty recent phenomena when we started having REITs here. So still a lot of regulatory things which are going through. REITs are becoming more and more popular. Now you are seeing a lot of investors from an acceptability point of view of REIT, right? And Prateek, who is our investor relation person, he's here. But if you look at just Nexus, our shareholder count of Nexus has probably tripled since IPO. We have just now crossed, I think, 50,000 shareholders in Nexus. So now the acceptability in the market is growing big time. A lot of investors are realizing that it's a right thing to own in a balanced sort of portfolios. The tax benefits which a REIT carries are getting understood in far detail as people are, as the time passes. So in my view, if you ask me what's next, I think it's just the beginning. A lot of it to be the next. Globally, if you see, if you look at the real estate ownership structures globally, large chunk of real estate indices have, like developers are like maybe 20% and 80% is actually REITs, which are the assets, right? So in India, whether that will happen, I think pretty natural that over a period, a lot of assets which are stabilized will move into REIT structures going forward. And you'll see that happening over a period. So I think we are just at the beginning of this REIT journey in this country.
But you're moving towards that 80% with every REIT that you're doing.
2 more REITs in the offing from Blackstone.
That's what I'm saying. With every REIT,
Two more.
I mean, if you look at the market capitalization of, let's say, listed players, you're not very far from kind of moving towards that direction.
Yeah.
Sorry, Arjun.
But again, to add what Sid said, I run a family office and we look at investments. 10 years ago, 15 years ago, you would look at buying strata offices, strata shops, and that is not the way to invest in real estate. Yes, you must have real estate as part of your portfolio, as any individual should. But it is really the way of doing it is through REITs. And you will find globally, you have hospital with REITs, you have hotels with REITs. Right now in India, we have mostly offices, and we have the one shopping center REIT that we run together. So the correct way of owning an asset is through a REIT structure. And right now, I think REITs in India probably control about 15% of the real estate. Is there a headroom? This number should look like 60-70% in the next 10 years. So individual ownership of real estate, other than for self-use. If you want to buy a house, buy it for yourself. But if you're looking at, who wants the headache of renting a shop and getting into finding tenants and landlords and things like that? It's a zero-sum game. Trust me, it's a zero-sum game.
Let me just add to what also Arjun said is one thing that even from regulators and the Ministry of Finance, etc., who are involved in this whole REIT process, there is a lot of positivity and a lot of focus to grow this product even more in future. 2 things which are helping this. One, obviously, a lot of funding needed for infrastructure going forward. And there is a product called InvIT, which is very similar to REITs, but basically infrastructure assets, and which is where they are seeing a lot of focus. that you can raise so much money for roads, power, transmission, etc. So which is very helpful. And second is, in a way, the cleanup. A real estate which was, say, 20 years back was associated with maybe a lot of bad things, right? Over period now it's well governed. There is a board of director, annual general meeting, quarterly results, clean results, every quarter distribution. I think this brings a lot of governance and a lot of clean framework to this whole real estate ownership setup, which people are seeing a lot of benefit in. And as I said, it's just the beginning in my view.
Arjun, you spoke about the hospital REIT, and there's hotels and there's office and there's warehousing now that is also there. But I mean, since we're on a retail platform, what is special about retail real estate as against office and warehousing and all the others?
Well, you have to look at it from many aspects. This is a true diamond, with many facets. One is that you have to be very, very dynamically running it. You have shorter spaces. So let's say you could be leasing, 200 square feet to 20,000 square feet, or 80,000 square feet at an anchor. But in an office spaces, you're doing larger leases. You have a flat return, growing based just purely on, every 3 years. If you can get 10, 12% growth, you're lucky. You fight for dimes and pennies. Here, you have the ability to present yourself in a very, very, I would say, dynamic opportunity to the customer. You get a better return for sure. And it's a difficult asset class. It's not an easy asset class. Let me tell you, this asset class is not for the faint-hearted. That is why we are seeing that acquisition assets, we have a pipeline of acquisitions, and it takes us between 12 to 18 months to close a good transaction through diligence and understanding the asset, and because it's what we do with the asset that is important. It's not what you may be buying at a certain price today, but it's really what our teams envisage and plan around that asset. And mind you, they hit the day, ground zero running. There's a playbook for that as well. And so it's more fun. It's exciting. You're meeting customers. You're playing the India consumption story. If you really ask me, this is the correct way of, forget real estate. If you want to play the India consumption story, a shopping center is a full microcosm of everything that is in India. Whether it's cinemas, whether it's food, whether it's big boxes, whether it's Instagram brands that are in our kiosks now, whether it's international retail playing India, it's Indian retail playing India, it is all there. It's all there. The 200 odd doors on an average across a mall is all representative of consumer India.
And also, it's a saying, and we spoke about this when you were talking about the global lens. Everyone overseas has enough and more social infrastructure to get out to. In India, actually, a mall is the safest and most comfortable social infrastructure that you can use. So, completely believe in this. I'm going to do a quick 2 questions. Siddharth, starting with you, and then Arjun, you have to answer the same one. What's next?
I think Arjun just highlighted what Dalip said, and I'll kind of repeat it. Do we want to double this in next 5 years? The answer is yes. Whether we'll be able to do, I think we'll see over time. But the hopes are high. We are working hard. We have a great team with us in Nexus, a great platform. I don't think we could have asked for a better team. And under Dalip's leadership, whether we'll double it in next 5 years, that's the hope.
But I must say this. We're talking about adding 20 million square feet of retail space in the next 5 years. That's what doubling is. Arjun, what's next?
Well, I think a combination of acquisition and greenfields, that would be amazing to see that happen. I think we want to test the first one ASAP. That would be there. And I think if you really ask me, what excites us most is this joint asset that Blackstone and Select have acquired outside the Reit in Calcutta, the South City Mall. I think that is absolutely, it will be the next Select City Walk of Calcutta. There's no question about it. Honestly, I get the same feeling when I walk into that mall and I see the consumption story that is panning out in that area. It is very exciting. And I think we have a great opportunity to get that mall in order. great bones, great infrastructure, parking, location, heights, size, scale, it's got everything. So I think that really makes us all very excited. And of course, we lean on Nexus to support us, so it has some support. But as we said, Amit here manages that asset for us as it's outside the REIT. But yeah, it's if you really ask me, things like that are very exciting, very, very exciting.
But it would have been a good number 20 to add if we could do it right now.
Well, don't 20 and 21 are not too far. 20 and 21 are not too far. I can't say more than that, but I can certainly tell you that number 20 and 21 are not far.
Chalo. Arjun, answer that. I'm going to close with you. What keeps you excited?
A lot of things. Nexus definitely keeps me excited a lot. If you ask me the kind of things we are doing, and I think you'll hear about, call it next 12 to 18 months, a lot of new things coming out. But in terms of tech, in terms of AI, and I know globally there is a big debate that how we can integrate this with the old generation like real estate type businesses. But Nexus, in a way, if you ask me, showing that pathway and some of the stuff we are seeing now, month on month, we meet Nexus team, go through a bunch of things. And this tech enablement and how we are able to include that in a mall business. I think you'll see a lot of exciting stuff coming in the next 12 to 18 months. And Nishank there smiling. He's the one who's leading that whole effort for us. So all the best, Nishank.
Yeah, I think I want to just support what Sid said. You will see some really exciting stuff coming out of some cutting edge tech that is being launched by Nexus in the next few months. I can't speak more about it because it's really exciting to see how tech and a mall center business can get integrated. Honestly, when I first heard about it 2 years ago, I had my doubts. I really had my doubts. But you know, the pilots that we are seeing that are running at the moment behind the scenes, and I think that could be a game changer for the industry. Basically, what is our desire? To boost consumption. We want every retailer sitting out there who's a part of our shopping center businesses, we want each and every one of them to succeed and succeed and succeed. Your success is our success. When you succeed, when we can drive better consumption into your stores, that makes us sleep better, and that's what, you know, for want of a better word, turns me on.
It sounded like Arjun was closing on my behalf, but I think great conversation, guys. You know, I think the India consumption story is completely on. I think the kind of tech that is coming in is great. I think the REIT story is kind of, you know, really playing out, and I think we learned a lot about why REIT is actually the future of India. And I do want to close this, you know, kind of saying that I'm hoping for that, to see that next 20 million square feet coming on board. So thank you very much, Arjun, and thank you, Siddharth, for being part of this. And thank you for all of you to listening patiently. Thank you.